Welcome everyone to this, my second video about my gold favorites, a series which I started a while ago. It's a bit of a mix between that and my thoughts on one of a requested stock, which I will get into in a second. This is actually kind of longer than I expected. I'll try and speed up the narration on most of the places because there's a fair bit of information here. So without further ado, let's get into it. So I had a lot of this worked out, numbers, whole bunch of stuff um, yesterday, and then today, of course, Argonaut reported something, and they changed. They had a new presentation, and some of the numbers are slightly different. They must have known that I was planning on doing this video, and so they changed it. But anyway, so I just want to comment that they reduced their 2019 guidance from 210 on the low end, 210,000 ounces to 200,000, and they slightly increased the all-in sustaining cost by $25. I'm not impressed, but this sadly is kind of standard. But I just want to say this because the numbers I used are prior to today. And on the subject of unimpressed, just a small point here, and I wasn't really going to, didn't really want to associate with Argonaut because I've seen it in many places, even in places where people rave about the great management. There's some, in presentations, there's a lot of numbers that get used that are just wrong or based on some expectations that are not near reality and never get addressed or when they get changed. And I have noticed this in a few spots for Argonaut, as well as many other places. But for Argonaut, I will say that in fairness, on one of their assumptions, Magino that I'm referring to in particular, they are overly fair at times. But sometimes their assumptions are based on numbers that you have to drag up from the past. And this is just leads to my point of the industry needs to stop trying to BS its investors. It's not helping. If they need to show what it's worth at what projects are worth at different gold prices, chart it out. Show it's worth nothing at this price and this much at that price. Do it, but don't try and hide it. So this video is going to be taking a look at Argonaut Gold. And now, so who might want to look at Argonaut Gold? Well, if you believe there's value in gold and value in gold miners, then this is an area that you might want to look at. And this case specifically, Argonaut has an element of optionality added, so which means assets that will expand in value once at a higher precious metals price. Now, due to the higher all-in sustaining costs and the Mexico laws and such, I would rate the risk on this one, well, the relative risk as 6 out of 10. Yeah, and they're looking to grow through free cash flow, so we'll look at if that's possible. So quick note, as I mentioned last time on my chat with about Equinox, I am long this one. That doesn't mean I think you should be. There is some severe downside risk in this one. Below $1,000, this begins to look scary bad. It's $1,000 gold, that is. And so although I am long, it doesn't mean it's right for you. And what's it worth, I'm not going to discuss. I'm not going to use net present value discounts or anything like that. I'm not going to do that. That's for you. I'm just going to talk about it. Now, I also, before I start talking about what I like about the company, I like to address the risks. And with 950 or with around 1,000 all-in sustaining costs, if the price of gold goes below that, then it begins to look very bad very quickly. And there is new laws in Mexico where there's consulting is required before starting new mines, which could be a risk because they do have assets there. So that's a risk, and as always, there's execution risk. It's possible, not that someone's going to get executed, but that they execute the projects poorly. And also, I just wanted to note that although I do think technically that it may be bottoming here, there is substantial overhead resistance which would prevent sharp upside moves. Okay, so let's look at Argonaut Gold. So today, the market cap is 187 million US. Its production going forward is supposed to be 210 to 225,000 ounces at all-in sustaining costs of their goal is, I quote, at or below $950 an ounce. Now, the first 3 quarters of 2018 were $862 an ounce, although I do know that the third, I believe I said 18 of 18 are that, but I believe the third quarter was above the 950 because there was some issues regarding permitting and they couldn't do blasting and so on. Anyway, I digress. Now they have 3.8 million proven and probable ounces, 8.1 million measured and indicated. They have 3 mines, all of which in Mexico. They have 3 development projects, 2 in Mexico, 1 in Canada, Ontario to be specific, because I know that throughout Canada that changes things. And they have 2 exploration projects, both in Ontario. So herein lies the question at Argonaut. What is worth $200 million? Is their cash flow worth that? Or part of that? Is Magino? Or are there other assets? That's what I will try to look at. Now going forward, when I'm looking at these numbers, I'm using their guidance of all-in sustaining costs. Well, they say at or below 950. I'm using 950, even though in some cases later it could be lower. You'll see I include 150 from one project at 950 in some calculations, even though they say it could be 714. Whatever, I'm just saying I'm taking 950 and I'm taking the low end of their projected guidance, and that's it. So there is a small amount of insider ownership in this one. The CEO owns 1.9 million shares, which is not nothing. I'd have preferred more, but I think that if you look at some of the acquisitions, they've shown a fair amount of discipline. So that's one thing that has me hopeful about the management. So I thought I'd look at this one a bit differently. With an optionality play, your upside is obviously exaggerated, but I wanted to look at the downside. So assuming the production that I mentioned before, at 950, which is their target, what would the cash flow be at each of the lower, for the moment, gold prices? And this is assuming no value at the at above the cash cost, because that's just all-in sustaining cost is only representative of what I look at. So if you look at the different cash flows, those are in millions. And just remember that right now, the price of this is 187 million. Now again, I'm not here to discuss what is fair value for something, but I'll just say if you're impressed by that value proposition, just wait for what comes next. So looking at 3 of their acquisitions in recent years, we'd start with Magino in 2011, or 2012, sorry, which would seem to be a terrible time to make an acquisition. And in fairness, it probably was. However, let's look at what they did. They paid 340 million for the project. However, they paid with their shares at $10, more north of $10 a share. So if you do the math and figure out with today's shares what they paid for Magino, it's about 45 million. And that for 2 million proven and probable, 4 million measured and indicated ounces in Canada, it's not as terrible as it could have been. You look at then Cerro del Gallo, sorry, don't speak Spanish. I'm sorry for butchering that. And that's 1.6 million ounces on a massive land package, and they paid $15 million for it. Okay. And then you look at some concessions that they bought for $26 million around their El Castillo land package, and that increased their resource in the area by like 70 something percent, and that wasn't paying much, and that got them a few more years, maybe 5 more years from that mine complex. So now let's take a closer look at Magino, which they bought with evidently overvalued stock in 2012. Like I said, millions of ounces of gold there. The plan currently is to produce 150,000 ounces a year on average at $711 of all-in sustaining costs for 17 years. The CapEx is a bit high on that one, but not relative to some other projects, but 321 million. And the value of that project is 288 million at 1250 gold. In other words, 1.5 times the market cap on this in the net present value in this project at lower gold than current. Another one of their assets that they've been putting in their presentations recently, and you may be able to tell by my tone that I'm not thrilled about them talking about it, because it's based on the feasibility study was based on $1,500 gold. So, okay, I'm not going to imply too much value in this now, but if gold could get higher, then in theory, that's another $200 million of net present value. And the important thing on this one is the CapEx is less than 100 million, meaning it could be built through existing cash flow. And it's a similar story for the project that they bought from Primero. It has 1.5 million, I'll say, ounces of gold, and is not really economic at these levels. However, in their resources, they have about 30 million ounces of silver. And again, when they looked at developing the project, not them, but the company who owned it before, that's when silver was at $25 an ounce. So if silver gets high enough, then there could be value here. And if you believe in $50 silver, then it's worth more than $15 million. But at this level, I'm just going to assume basically no value for this project. So with these projects, their plan, again, if everything goes according to plan, even at these prices, is to use the cash flow from the profitable production to build new projects, have greater cash flow to refill the projects, finance bigger projects, and so on and so forth. In theory, sounds good. So all of this kind of leads me to the value proposition for Argonaut Gold being warp. Not a pleasant word, but I'm sure you've probably heard of growth at a reasonable price. And I call this optionality at a reasonable price, because you get the optionality of the upside, and then you get, I think, a reasonable price for the cash flow and assets that are in production. And then you get Magino, but that's a whole different story. So, well, I do believe they have some valuation readjustment upside. I think the bulk of the upside would come from higher gold prices where they suddenly have projects that are able to generate a lot of incremental increased cash flow. Now, that being said, at 1100, they're okay, and at $1,300 gold, they're fine. And remember, before I proceed and recapping what I've done before, their market cap is $187 million US. That's going to be relevant when you look at the assumptions of potential upside. So, looking forward to the different possibilities with the successful optionality play here, which could be possible. The first line here is 210, the numbers, the cash flow at 210,000 ounces. And then the next line is I included if they brought in one of their low capex projects online, which for the purposes of this, I assume that they might only do at 1,500 or more gold. And then the bottom line has that other project plus Magino. So as you can see, if the price increases enough for them to bring their projects online, then the production goes up, then their cash flow also increases much quicker on two steps. So hypothetically, at $2,000 gold, which is not even doubling of the price of gold, I say not even, it's still a substantial move to the upside, but at $2,000 gold, if they bring on their two other projects, their cash flow would be in the neighborhood of probably higher, lower, depends on how their costs change, but 472,000 or $1 million per year. And if you give it a multiple of 5 times cash flow for fair value in theoretically, then the stock becomes a 12 and a half bagger at that point with that cash flow. And then here's why I like it as an optionality play. Because in the meantime, they still have a cash flow and they don't need to dilute. They don't need to issue shares. They don't need to issue warrants to keep themselves alive. And here we sit at $1,280 gold. What happens if it goes back to $1,200 gold? Well, I'm still fine holding this thing. $50 million a year in cash flow. That's basically, one might say, how they're valued right now. Oh yeah, and did I mention they have zero debt? Net debt, that is, they have actually 8 million in debt, but 22 million in cash. So I'll say zero debt and 14 million in cash, which isn't super strong on the balance sheet, but I think 2019 is supposed to be a boring year of adding cash to the balance sheet, but I don't have a problem with that. So now is the age-old question of, will they let me down, you down, anyone down? The answer, I don't know. Maybe. I do know that before last quarter, they had a long-standing multi-quarter, multi-year track record of exceeding expectations. But again, every record must be broken. And also, will Mexico's new law be a problem for them? Again, maybe. Could gold decrease in value by 30%? Again, maybe. All of these could be devastating risks for the company. So to summarize, they're a developer and a producer. They have, I believe, value at these prices. They have upside optionality, cheap valuation, and undervalued or completely ignored development assets. So as a reminder, I am long this one, and I have the hopes that if gold goes under $1,000, they would shut down and not start mining me. and other shareholders, that is. I have the realization that at $800, this company could lose 90% or more of its value. Um, I would not be super surprised if gold went back to the thousands, and if that happened, the stock could go down 50 or more percent, and I hope to have the courage to buy more if that should happen. I want to have a big position in this one because if I'm right, I would be able to de-risk along the path to being right. So what I like about this one is the value, the asset base, the asset locations, the strategy of sustainable organic growth, and the cash flow situation. What I dislike, and these are not problems exclusive to Argonaut, the non-addressing of negative changes and certain lacks of clarity. So these were my thoughts on Argonaut. I'm curious to know what yours are. Have you heard about it from someone other than me? I know I've mentioned it a few times, but I'm curious if you've heard about it by elsewhere. I also am wondering what everyone out there's target price is for gold. I mean, I'm just curious. You have a lot of opinions out there, and I'm curious to know what all of you think. So that's about it. I'm sorry for not hyping it even more. I try to stay away from overly hyping things, but I'm sorry if I added too much hype on this one. I tried to talk about some of the potential drawbacks, but I think that you can only do the right or make the right decisions if you have a balanced view. I hope to have helped provide one of those. And yeah, that's it. Thanks for watching. I hope you enjoyed.